it's retraced from the 1 to 2 move. All right, so you can actually take a look really quick and see that, from 1 to 2, we dropped down on the retracement to 3, and that 3 is exactly, looks like 39% of a retracement of the 1 to 2 move. So normally, if I'm using the 1, 2, 3, I'll just keep that checked, because that's what I really want to see. I want to see how far it's retraced from the previous wave, and if it breaks below 50%, then it's not just a retracement. Normally that means it's a change of direction. You're not having an official wave. It's not always the case, but normally the full 50, if you break through the 50%, it's no longer a real 1, 2, 3. Usually you want it to be 50% or less of a retracement for it to be a legitimate one. If you are back here, the market's moving along, you've drawn out your 1, 2, 3, and you're basically at this point looking for another move up, what we do is turn on the 3, 4, or the CD. Now we have 1, 2, 3 on the chart. There is no 4 or D. We're actually going to tell the software to project for us. We're going to say, I want to see out into the future. Check the 3, 4 CD. And what that's going to do is it's actually going to create Fibonacci percentages and chart out forward through the window. Okay, so here I've turned on the 3, 4 CD, activated the Fibonacci, and now we can see those Fibonacci percentages right inside the chart going forward. You could even actually expand it even further. You could say that along with that Fibonacci, I'd like to see a further projection, and you can actually go up to the Fibonacci's 130.9 and 161.8% as well. Okay, but what I would do, obviously I know what's coming, but what I would work with if I were in this position, so you've got this one price bar down right here, you bring up your 1, 2, 3, the market moves forward again, drag down your 1, 2, 3, market moves forward one more time, and there we have our bullish price bar. It breaks up, and at this point you've got your 1, 2, 3, and you're starting your 3, 4 wave. Okay, what I would do is I would drag this over to the new price bar, and at that point you can place in your trade. You could say that, I'm going to go ahead and place it in order to go long. I'm going to say it's right about here. I'll even make it green so I can see that. Obviously, you could actually place the trade live, real money or paper trading, but we're back in the past, so I'm just showing you with these green lines. So we could place it in order right here to go long, and then as the market moves forward, we would enter in at this price, keep on moving, and we use this 1, 2, 3 as our projection for what's going to be coming up. And you can even have it go through and potentially put in some stop losses, something to obviously protect your trade. Right here you can see that it's hit the 100% for that. One thing you could do is you could actually put in a profit-taking order up at the 100%. Once it's made that full wave, that full move, you can say, you know what, once it hits this 100% price, go ahead and put in a limit to sell, take in my profit. And at that point, once you move forward, the market hits that price bar, and you're done. You would close out your trade, and you would take in the profit from when you enter it to when you exit it. And that would be on this E-mini 237, which would be 19 ticks. Okay, so you could take in 19 ticks of profit, and you would do it in the space of, let's see, if we were to grab our handy little day calculator, we got in right here on this price bar, and we got out right here on this price bar. Okay, 12 periods, 15 minutes. Okay, so we would be looking at what, 130 minutes, right? 3 hours, I believe, is actually showing us the exact time. Nice, we have that in there as well. Okay, over the course of 3 hours, taking a profit of 19 ticks. I'll take that any time I'd like. Okay, and also the day offset. This little tool right here that is grabbed is something I will go through. We call it the bar calculator now. I'm a little old school on the terminology. You can see that from this point to this point, we never made a new low, okay, and we made 4 new highs. Just an interesting little tidbit. This gives you a lot of information. It tells you the number of price bars. It tells you the exact time, and it will also tell you how many new highs or new lows were made. If we were to drag this back further in time, okay, to start right here on this price bar, we can see that we made 3 new lows, and you can actually see that right away. See, this next price bar made a new low. Next price bar made a new low. This price bar made the lowest point between these 2 bars, okay? And at that point, it's only new highs. This one would have made the new high, this made a new high, this made a new high, this one made a new high as well. and then we bounce back and forth. This guy may have made a new high. It's very close. I can't see just eyeballing. And then we definitely have a new high with this price bar right here. So this little tool right here, it's handy. It's easy to use. Drag it back and forth across the screen. I like that one. I don't like it near as much as the dollar calculator, though. Dollar calculator, just this little guy up here, the green dollar sign with the line. It's one of the simplest and most useful tools you can have. You click between two prices, and you will see exactly how much money you would have made had you placed in a trade between those 2 points. Simplest thing in the world. You can go through and see percent value. You can see ticks. Another nice thing is if you're trading odd quantities, right? By default, it's a quantity 1. We can see over on the right side. But you know what? If you say, hey, what if I traded a quantity 3 trade between those 2 prices? Then you'll see I would have made $750 before fees, okay? Before your commissions. So that is a handy tool to have as well. Let's go ahead and look at some of the other sections, other options that we have. I'm going to go ahead and delete all the tools in the chart. I'm just going to right-click in the chart window, and here I'm going to select Delete Drawing Tools. Just removes everything all in one shot. Very nice to have that. I'm going to go ahead and adjust my scaling real quick. I'm using these little arrows in the bottom left and bottom right. I'm going to go ahead and drag us forward, and I'm going to play to the current date, and then I'm going to send to the chart. All right, so now we're back to current market values, right? We're just back to where we currently were running at. I'm going to go ahead and take a look at this screen. Now, I didn't actually look at this chart beforehand, by the way, so I don't have specific patterns that I can pick out and that I had pre-looked at. So I'm actually kind of just going along as I look at the chart. Let's take a look here. How about this guy? All right, I want to take a quick little look at a inclining, declining channel. It's also a very common thing for just calling it support and resistance. Right here we have a section of price bars that are going in an upward trend. Okay. Normally what you'll do here is you'll just grab your line tool, draw out your support onto the screen. Something I actually do, if it's support, lines of support, I make it green. If it is resistance, I'll make it red. Actually draw these right out onto the screen, put out the lines, so that way I can go back in time, I can take a look and just see exactly where things are at. So green would be our support, red would be our resistance. Here's our channel. We have in the 2 points, and if you were back here at this point, looking at this, this is an inclining channel. The market has been going up. We can actually place in trades to sell or buy on either side of these lines. It's kind of an interesting little thing, like if we're back here, okay, we could place in an order to buy if the market drops down and hits our support, right? We could put in orders to sell if the market hits our resistance. And we could actually bounce back and forth. It's more of a swing trading strategy, day trading strategy. Let's see. Oh, I reversed them, didn't I? There. This green line will be my buy. This red line will be my sell. We keep moving forward. And comes pretty close. Next price bar would be about there. Play 2. Move it up. Play 2. Actually, in this specific case, if we were moving along one price bar at a time, right, which is important, we could say that we would put in a order to sell right here. We could have an order to buy right there. We step it forward, and as we do that, we could actually put in an order to sell that would hit right here. Okay, market hits up, jumps up, hits our support. Only thing is we wouldn't have had this resistance line at this point because I actually used this to draw that out. If we were back at this point and being honest with ourselves, this line actually would be right about down here, right? Which means that we actually could place it in earlier. But what I'm going to do is step us forward. We could put in a sell order here and put a profit-taking order back down here. It's actually just nice to go back and forth and bounce back and forth, but I'll be honest, it's not really my style. I'm not much of a swing trader. I'm not too big into jumping in and out. I like to buy and hold at least a little while, just to take my profit watch for the support and resistance. Let's go ahead and keep on moving forward. one price bar at a time would be best. Okay, right there, that's a sell. Okay, you broke down out of your channel.